Let's first talk about the markets. That's where we're seeing the realty index grow to a 15-year high now, and the small cap and mid cap indices are also at record highs. The Nifty once again crossing 19,800 intraday, but settled slightly lower. Bulls clearly testing the benchmark index's resistance yet again. And at the same time, we've got the RBI come out with its November bulletin, and they're highlighting ebullient festive demand and lower inflation in October that has been reported. So the question to ask is this another boom that is around the corner, or is it just a blip for the moment, a tiny spot of light for the perpetual bulls? Well, we'll talk to our expert about this, but first let's find out what went down in the markets today. And for that, Anisha, my colleague, is joining us. Anisha, tell us about the action that we saw in the markets. That upward momentum continues.
Well, the day would have looked much better if you would have ended at around 3 p.m. because at that point of time, we were at around 19,850. But within the last half an hour or so, the markets gave up almost 100 points. Nifty ended around 19,750. And if you look at the Bank Nifty, that was the key reason we saw that sharp slip. Axis Bank, ICICI Bank, IndusInd Bank, these were the drags on the markets today. And the PSU banking index was also in the red. So because of the pressure coming in from the banking names, plus the likes of ITC and L&T underperforming, the Nifty ended off the highest point of the trading session. Separately, if you look at the sectoral indices, Nifty IT definitely deserves mention. This is one of the highest single session gain that we have seen in the IT index in the last 6 to 7 months. Coforge was doing quite well. You had Tech Mahindra doing quite well for itself. TCS, on account of that record date announcement of the buyback, was also in focus. Real estate stocks, they continue to power ahead. Prestige, of course, is sitting at life high levels, but even other stocks like a Sobha, like a Oberoi Realty, all of these were gaining in the trading session. It was FMCG which was a bit tempered down, and then of course financials were on the back foot. Having said that, the broader markets did absolutely fine for themselves. Both the mid cap and the small cap indices hit fresh record high levels, at least on an intraday basis. So overall, it's good going for the market, but just that last hour sell-off is something which is a bit of a worrying factor.
What is also a worrying factor right now is what the RBI is putting down in its bulletin for November, and they're talking about this continued battle against inflation. Let's understand the reality in the markets as we see it right now, and understand whether this is a blip that we are seeing right now, or is this a legit bull run. Chakri Lokapriya is CIO and Managing Director of TCG AMC, and he's joining us from Chennai. Always good to get in your perspective, Chakri Lokapriya. Thanks for making the time. Here, on the one hand, you have the bulls breathing fire into the markets, all charged up with that Diwali rally. And then we have this RBI bulletin, I was telling our viewers, which speaks of a prolonged battle against inflation amidst a slowing global economy as well. So it clearly begs the question whether this current run-up that we're seeing in the markets is a blip or another boom that we will, that perhaps may take us beyond 20,000 soon. What's your take?
Hello, thanks for having me. I clearly think this is a bull market. And next year, this time, in about 12 months, we'll be at least 15% higher from here. Let's say about 23,000-ish. The reasons are multifold. The RBI has actually, there are two messages. One, inflation is down, which is good news. Second, they want to keep the trend in place, and therefore they're kind of putting a check, increasing the weights on the consumer spend. So I think those are largely safety checks, but I think the bull run is intact.
Right in pointing out that inflation has been trending down in recent times. It has moderated. And after hiking the policy repo rate by 250 basis points to 6.5% in 2022-23, just to be able to tackle that rising inflation, now the MPC has left the policy rate unchanged, Chakri, on the 6th of October. And this, for the fourth meeting in a row, they've left it unchanged. Do you see the course changing anytime soon? Because they're talking in the November bulletin about this prolonged battle that they have to fight, that it's going to be a long time before we actually come out of the woods when it comes to fighting inflation. The next meeting, of course, is at the end of the first week of December. What are you expecting?
Indeed, the global battle of inflation continues. India is not alone. I think going into December, given that the lower inflation read that we have had, RBI leaves the rates unchanged in the December meeting. And I think there's also because the US is also likely to pause in December. And therefore, we have to wait for the peak sometime in early next year, calendar next year, before they start cutting rates. But in December, it's likely to be a hold.
December is what you're expecting, but tell us about the other moving piece, the factor that we need to watch out for closely, the movement in crude oil prices, Chakri. How is that likely to change the course of the markets, at least in the near term, because of the high that we saw and now the low that we are seeing? It has been fairly volatile. So in the near term, how will crude oil prices determine the flow of the markets?
That's a very good question, and that has been the big moving part for India. All the various kinds of global unrest, political unrest, whether it was the Ukraine or then the Israel-Gaza, kind of spiked up oil prices. But globally, there is a weakness and economic weakness which has kept oil prices under a lid. And, around that $80 mark, I think India manages its finances fairly well. And therefore, and you can see the evidence of it with falling inflation. So therefore, around $80 mark is a good number. And with the highest GDP, and which is likely to be revised up in India's case, which is to 6.7%, I think, largely we are fine as far as oil inflation is concerned. Other supply chains, commodity prices have corrected, so which is again being reflected in margins of companies. So I think the central bank has done a great job. Companies are beginning to see the benefits of lower input costs.
Meanwhile, do you see the move towards riskier assets continue? The traction that we're seeing in the broader markets, will that persist or not? And are we likely to see the action shift to the large cap soon? Because that is also part of an entire bull run. When you have that kind of secular move up, then there is more faith in the kind of uptrend that we are seeing right now.
Whether it's the large cap or the mid cap or the broader market, they haven't really done nothing much in the last 3 to 5 years. The last 3 years, the CAGR of the Nifty is probably about 11-12%. More or less similar numbers, slightly higher maybe for the small cap index and the broader market, around the same numbers. So it's not an overheated market. Mind you, over the same time period, the US stock market, the S&P 500 returns have been higher than that of the Indian stock market. Is probably about 18%. So given that backdrop, and inflation is today a bigger issue in the US than in India, so which means RBI and the US Fed are both fighting inflation. So RBI has done a better job. So which means India is likely to have an earnings upgrade. So which means both the mid caps and the large caps benefit, and going into next year.
As far as festive demand is concerned, the RBI bulletin is definitely talking about the ebullience over there, and that is definitely likely to play out in the earnings in the quarters to come. But globally, the RBI is seeing growth slowing down, especially in manufacturing and services, Chakri. How much of that is going to play out in the Indian context, at least in these two pockets and the associated ones?
Yes, from the Indian perspective, the global exports are mainly IT, information technology, and some amount of metals and chemicals, and of course pharmaceutical. But pharmaceutical is largely a kind of a staple demand, so those curves remain fairly stable. Now, in the case of IT, we've seen the demand slow down. Order books are there, but execution has slowed down. That has held back the IT sector, and it'll probably do so for the next couple of quarters. In the case of metals, cyclically things are weak, will likely be so for the next couple of quarters at least. Chemicals, same story. So against this backdrop, and that has been the backdrop for the last 12 odd months, and so therefore you can safely say that the Nifty is not overheated. Despite the weakness in 3 big pockets, the Nifty has held up. So this is because of recovering demand at the domestic front.
But meanwhile, if you're looking at, you did mention IT sector. Now you're seeing the kind of traction build up over there. That's one pocket. There is auto sector as well, which has moved up quite nicely. And then you're seeing the realty stocks, 15-year high right now. Which are the sectors that you favor right now, where you're okay with the valuations, that you think we need to align our portfolio to kind of factor in all that is to come and all the points that you're making?
Okay. In fact, if you look at the Indian market, if you can kind of break it down into maybe 3 or 4 broad buckets. One is consumption, which is on the consumption, like you mentioned, is where it's real estates and automobiles, jewelry and other things. And then there's consumer staples, of course. Now, consumer discretionary, which is automobiles, has been strong because people are like their personal mobility, like the freedom of mobility. They want to invest in safety for the future. Therefore, real estate has improved. And things like jewelry, even though their consumption, they hold their value in terms of purchasing power over longer term. So Indian consumer has largely invested towards safety and protecting their livelihoods and mobility over a longer period of time. Then second, industrials. Industrials, domestic industrials, sectors which were not talked about before, like defense and railways. The government has done a very good job, and therefore you're seeing a pickup in earnings over there. And then we've discussed global cyclicals, or rather the globals like IT and metals, which are weak. So, in case of the domestics, still the earnings are yet to recover. They're still in the early stages. So I think, therefore, once you add all this up, the earnings upgrades for the Nifty will happen.
We will keep watching the markets, all the cues that you're pointing out as well, and the sectors that seem to be drawing traction. Chakri Lokapriya, it's such a pleasure having you on this edition of India Tonight. Thanks very much for joining us.
Thank you so much for having me.
Meanwhile, we